Okay, cool. All right. Well, welcome everyone. My name is Paul Abraham, and this webinar is for you if you've gotten a PPP loan, it's been approved, it's been funded, and now you want to make sure you keep it and you do it the right way. I just want to make sure that everyone can hear me correctly. So can I ask you guys, can you go in the chat and type PPP, just type PPP in the chat or something else that's amusing, just to make sure. Okay, perfect. I love it. Hi, PPP. Hi. I can hear you. Okay, awesome. Cool. All right, excellent. Good. All right. Right now, you guys, you owe the money. Okay, that's the default. You owe the money. You have to pay the money back. And it's a loan. It's a loan. It's what it is. That's your current state. Okay, the default is not that it's going to be forgiven. The default is that you owe the money. Now, the issue is that Congress and the SBA have not been very clear at all about how to get this amount forgiven. They've given us bits and pieces, and they've dripped on us, and they've improved the information. But guess what? As we speak, like right now, during this webinar on Friday morning, up on Capitol Hill, they are still working on changes to this whole thing. Yesterday, the House passed some changes to the PPP forgiveness process, and right now, we're looking at the Senate and what the Senate is going to do. And I actually have my phone right here, and I'm hoping that if there is an update, my contacts on Capitol Hill will shoot me a text message, and I will look at it and I'll let you guys know if something happens, in the next hour. But if not, then we'll be updating you later on if you're using our help with this whole process. So it's kind of weird, but we're going to give you up to date, basically the information up to 11 o'clock this morning, and hopefully you'll walk away from this more informed than anyone else. Now, still, it's a very difficult process. Imagine if you could just have someone hold your hand through this whole process and rest easy that you did the best you can to maximize your forgiveness. And you've already taken that step. So this webinar is a great start, and I'll tell you more at the end about what else you can do. But let me tell you just a little bit about why I'm doing this. I mean, I've grown up in and around business. Okay, I'm a lawyer, but my first passion and my true passion is business. And I've grown up in my own family. I've grown up around real estate, the restaurant industry, construction. My wife is in medical. Obviously, I'm in legal, and I love it. I love working with business owners. And when this whole thing happened, I felt the pain like all of you. And I can track it down to the exact date. As of March 11, I mean, things were great. And then March 12, I come in, I look at my calendar, and appointments for the following 2 weeks, a whole bunch of them got canceled. We got very few calls in the end of March and early April. I mean, I felt it, and I know the importance of this loan. And, our law firm here in Fairfax, Virginia, by the way, for those who don't know, we're based in Fairfax, Virginia. We've got a great team. Our team has kicked butt. They've worked long hours since the first discussion of the PPP came out, and we've still got our whole team. Everyone's at full capacity, and they've spent this time to learn the PPP and know it inside and out. And we've been helping businesses with their applications and with their forgiveness. And by the way, can you guess the #1 category of businesses we've helped with both the application process and that we're now helping with forgiveness? Because we're helping all kinds of industries. But can you guys just in the chat send me what you think is the #1 category of businesses we've helped with the PPP process? I'm going to give you guys about 10 seconds here. If you want to send me something in the chat. Restaurants. Okay, good guess. No, but that's a good guess. Yes, lawyers. Somebody said lawyers. Exactly. Legal, law offices. They said it in 3 different ways. Exactly, lawyers. Law firms are the #1 category of businesses that we've been helping with this, because lawyers are smart enough to know what they don't know, and they know the traps involved and all that stuff. And I looked at the list of registrants to this webinar, and about a quarter of the businesses on this webinar are lawyers. So hopefully that gives the rest of you guys an idea of how important this whole thing is. And this is nationwide, by the way. Yeah, most of our clients are in the DC area, Northern Virginia, but we've helped clients nationwide with this whole thing. So you've come to the right place to get guidance. And so I'm going to go over the whole process with you guys as much as I can, and you know, between now and noon. We've already gotten so many questions through the registration page, and I expect, actually, I'm already seeing two. We haven't even started, but in the Q&A at the bottom, if you want to ask questions, that's the best place to do it. We've already gotten a couple of questions there so far, and I expect by the end of this webinar, we'll get a whole bunch. So I doubt I'll get to all of them. So I'll try to answer the ones that are applicable to most people. So we'll see how it goes. And one last thing, I think everyone will appreciate this here, especially the lawyers. You know, this is not legal advice. This webinar doesn't constitute an attorney-client relationship. Also, this stuff keeps changing. It just keeps changing. By the end of this call, a couple of the things could be a little different. So keep that in mind. So just don't take it as gospel. Don't consume this information if you're pregnant or nursing. Read the directions on the back. Yada, yada, yada. Good. Hopefully we're on the same page. So what I'm going to do now is I'm going to share my screen so that we can get started with the substance here. So one moment. Okay. Sorry about that. I'm just trying to. My chat disappeared. Oh, there we go. All right, cool. So we've got everything pulled up here. Okay, can everyone see? Is all you're seeing the PowerPoint? Can I get a yes in the chat? Okay, awesome. Thank you. All right, cool. So I'm gonna, what I'm gonna do too is I'm gonna turn off my video so you're not distracted by this good-looking dude over here. All right, cool. All right, so how to maximize your PPP forgiveness and keep the money without going to jail. By the way, when I was coming, you know, we were trying to come up with a appropriate, like accurate title for this webinar, we came up with the first part, and then somebody said, well, I can think of many ways to keep the money. Not all of them are legit. And we're like, oh, okay, maybe we should make it clear that this is the right way to do it, and you know, you don't go to jail for doing it. Hence that little addition. So first thing is, like I said, it's a loan, guys. You owe the money. You have to pay back every single dollar. Right now, the interest rate is 1%. The repayment starts about 6 months from receipt. The loan matures 2 years from the day you actually got the money. Now, why do I have a question mark? It's because the House bill that passed has extended that to 5 years. But again, that's just the House. It's not the Senate. We don't know what's going to happen. Like, the Senate might do their own thing, and then they'll talk, or the whole thing could fall apart. Like, you can't assume that things are going to change, but they might. But that's what it is now. So all of this is happening unless, of course, you follow the right steps to get forgiveness. So how do you get forgiveness? And first, let me clarify, forgiveness could mean a couple of different things. Forgiveness, you could get the whole thing forgiven and not to have to pay back any money. Or in a lot of cases, some people just will not be able, they just won't meet the criteria, and they won't be able to get the entire thing forgiven. In that case, then we're just looking at, you know, some, or what we call partial forgiveness, and that's okay. You know, that's okay. I mean, if you still do your best and get the most forgiven, and you're left with a little bit that you owe back, it's not a bad loan. I mean, it's 1%. You have time to pay it back. Obviously, we want you to get the most forgiveness because that's free money, so to speak. But not everyone should expect to get 100%, just because not the numbers don't always add up, but we're gonna talk about how we can make it as close to 100% as possible. So first, you gotta spend the funds on only certain categories, okay? Payroll costs is the big one. Now, payroll costs, it's so annoying because it was defined, they keep redefining it, but it's gonna look, payroll cost is gonna be a lot like what payroll costs meant when you filed your PPP application. So you probably did some homework at the time where somebody explained to you what payroll costs means, and that's essentially the definition we're using here. So it's first, it's compensation to employees. Okay, it's not compensation to, if you have independent contractors, that doesn't count. Okay, that you can't use. You won't qualify for forgiveness if you use the money for independent contractors. Okay, so it's got to be employees. It's got to be employees whose principal place of residence is in the United States, and it's got to be compensation in the form of salary, wages, commissions, or similar compensation. And you know, there's a whole definition, so I won't go to every part of it, but just going to hit the main parts. Payment for vacation, parental, family, medical, sick leave, allowance for separation or dismissal, and employee benefits consisting of group health care coverage, as well as state and local taxes, retirement. Some things it does not include is, you know, mainly the most important thing you should remember is this will not include the employer share of federal payroll taxes. Okay, so that part is not included. That's why, you know, initially, you know, including myself at the very beginning, we were saying, look, you should have a separate bank account, put all your PPP money in there, and then use that to just pay your payroll. Well, that's not really going to help you, because part of what you're going to pay in payroll, which is federal employer taxes, that's not going to qualify for forgiveness. So now you're using PPP funds and you're spending it on something that's not. So we're going to talk later about how to track spending, but just know not everything you pay in payroll is going to be forgiven. Okay. Costs related to the continuation of group health care benefits during certain periods, like paid sick, medical, family leave, or insurance premium. Mortgage interest payments on property. Essentially, what most people thought initially was that this would apply just to if you own a building or something, right? Your business, obviously. We're not talking about your personal mortgage. We're talking about your business mortgage if you own a building. But they've clarified that now to say that we can also include mortgage interest payments on personal property. Now, the term personal property is not really personal property. Personal property in this context means stuff that your business owns. For example, you know, like a car, right, or equipment, or stuff owned by the business. So you can pay the interest you pay on that, you can use towards forgiveness. Rent payments for real or personal property. So it's, again, not just your rent for your office, but also if you have machinery, for example, that you have a lease on, you can use PPP funds for that and get it forgiven. Utility payments, and you know, there's a whole, you know, there we go, sorry. They've been pretty vague about that. We've gotten more clarification since on what qualifies as utilities, but assuming you track the right utilities, you can use PPP funds on those. And interest payments on certain obligations, more specifically, other debt obligations that were incurred before February 15, 2020. And by the way, for all the stuff, the mortgage, the rent, the utility, the interest, it's got to be for stuff that was in place before February 15. So you can't have just taken out new obligations in early April and expect that that's going to be forgiven. And the last thing is refinancing idle loan made between January 31st and April 3rd. But for the other idle loans, we're going to get to that later on. Now, you've got to, this is just horrible. Okay, this is where it gets just awful. You've got to spend the PPP funds within your covered period. Okay, now what's your covered period? Your covered period is 8 weeks from your PPP disbursement date. So from the date the money landed in your account. I'm happy to give you an example. the first person who chats me the date they got funding, I'm happy to tell you what I think the end of your covered period is. So if you want to use the chat to tell me when you got the money. All right, all right. Okay, so, okay, I've gotten May 4 and May 5. Those were the first couple that I got. So, okay, we're gonna do 1, 2, 3, 4, 5, 6, 7, 8. Okay, so if you were May 4, by the way, again, do your own math. I'm just giving you an example, okay? If you were May 4, your covered period ends on June 28, and obviously if you were Cinco de Mayo, then it's the next day, June 29. So that's the calculation. Now, that's kind of the standard, okay? That's the default, if you will. There are exceptions to this. One exception is what we call the alternate payroll covered period, which, you know, somebody in the SBA figured out that businesses work nothing like they think they work. So they're like, oh, you know what? Let's look at another way to do this, but not really make their life easy. And the way this alternate payroll period works is as follows. So borrowers with a bi-weekly or more frequent payroll schedule can elect to calculate the eligible payroll costs using the 8-week period that begins on the first day of the pay period immediately following the loan disbursement date. For example, if you had received your proceeds on April 20th, but your next normal pay period is the first day of the next normal pay period is April 26th. So the alternative payroll covered period would begin on April 26th, and the last day would be June 20th. I don't know, like, and by the way, this is just for those with a bi-weekly or more frequent payroll schedule. So if you have a payroll schedule that is not bi-weekly, but it's semi-monthly, which is, by the way, is like 1 day off, for some reason this doesn't apply. This whole thing has been such a nightmare, which kind of explains why finally enough business pressure has been applied to Congress that they're now looking at different dates and different covered periods. So the House bill that passed yesterday actually has a 24-week payroll period, which will resolve problems for most businesses because then that's plenty of time for you to spend your money. And, you know, the Senate may or may not do something like that. You know, they're considering 16 weeks, but they'll probably settle on something else. And I don't know what they'll call it, but, you know, my one theory is the super duper alternate covered period. And whether or not they call it that, as long as they do it, that'd be great. Now, the fourth bullet point honestly has nothing to do with the actual presentation. It's just I was angry when I put together this PowerPoint, but it's true. Obviously, it's like now these legislators or no one at the SBA has ever run a business and they don't know how payroll works. So I'm glad that they're actually working on this now. So. Now, there are some rules you need to stick to, okay? First, there's what we call the 75% rule. Most of you have probably heard of this. This means that you've got to spend at least 75% of your PPP funds on payroll costs as I defined them earlier in this webinar. So that means that if you spend less than that, you're going to get less forgiveness. Now, you can't spend 100%. There's no, so it's got to be between 75 and 100. It doesn't have to be exactly 75, okay? It can be more than 75, which works great if your team has grown compared to last year in the last 12 months. But if your team has shrunk or if it's about the same, it's going to be kind of hard to hit that. Which is why, again, the House bill that passed yesterday has lowered that to 60%. We're hoping that, you know, whatever the end number is, is lower than 75%, but that's what it is right now. Now, there's another 75% rule, which you should keep in mind, and people have confused the two. This other rule says that if you've reduced pay for any of your employees more than 25%, so if they're making less than 75% of what they were making previously, your forgiveness gets reduced as well. Okay, so keep that in mind. And of course, we've got the $100,000 rule, and that's sort of part of the payroll cost definition. So if any of your employees gets paid more than $100,000 a year, then they cannot get more than that forgiven. So the SBA is going to take a prorated look at the 8-week period, assuming it stays at 8 weeks, and see that if anyone got paid more than $100,000 prorated during that period, the extra amount is going to be disallowed for forgiveness. Now, there are ways around that. You know, if you're paying retirement or health insurance, that's on top of that. That's not included in the 100,000 limitation. So you could pay the $100,000 prorated plus health and retirement and benefits, and you're fine. You can use that for forgiveness. And you know, of course, you've heard of the full-time equivalent employee average, which, you know, more commonly referred to as FTE. You've got to keep your FTE count. You can't, the whole point of this thing is to keep people employed. So they're going to look and they're going to see if you've reduced your FTE count. That's going to be an issue, and they're going to reduce your forgiveness accordingly. Initially, they were counting FTEs based on 30, so they considered a 30-hour employee to be, you know, full-time employee. Now they're changed it to 40 hours. So the math there is going to be very interesting if you've actually had changes in FTEs. So that's something for you to keep in mind. Now, a couple notes for those of you who are self-employed. So if you're self-employed, you can pay yourself, or you can get forgiveness for no more than 8 weeks worth of your 2019 profit. That was something that was not clear initially and became more clear, but that's your limit. So they're going to look at, you know, your 2019 and look at what, you know, 8 weeks of that is, and that's what you can pay yourself. Now, as far as your other expenses, if you're self-employed, you can only claim the non-payroll categories like rent and stuff like that for forgiveness if you claim them, or if you're entitled to claim a deduction for those expenses on your 2019 Schedule C. Weird, but that's what the rule is. Hopefully they'll make that more flexible as well. So now, how do you track your expenses? So like I said, initially, a lot of people, including myself, were saying put all your PPP funds in a separate account, and you still can, but it's just going to be very impractical for you to pay all your expenses from a separate account, because I gave the example of payroll. If you're let's say you have ADP or something like that. Okay, first you got the pain of like contacting ADP and making sure that you change your account information with them and make sure you do it in time before your next payroll and they actually use the right account. But even if you do that, part of your payroll is just not forgivable. It could be the federal employer taxes, or it could be one of your employees makes more than 100,000. So that's just not practical. So you can still do that, but you don't have to. You're not obligated to have a separate bank account. Probably the #1 thing you can do is just have, if you don't already work with a bookkeeper. By the way, just as a business owner, you should really kind of have a good bookkeeper in the first place. So this may be an opportunity for you to do that and help your business in general. But yeah, get with your bookkeeper and they'll help you with this. And they'll help you kind of create a ledger just for PPP forgiveness so you can present that to the lender when the time comes. But you know, whether or not you get a bookkeeper, just make sure you record the PPP deposit as a loan on your books, and then record the details for each qualifying expense. So specifically, you want to record the date of the transaction, the expense amount, who the vendor is or the payee, and the expense category. So was it rent? Was it you know, interest? Whatever. And then store the receipt or you know, any other documentation of payment, because you may need that. And just a note on taxes, because we get that question a lot. So okay, so the PPP funds that you get, let's say they're forgiven, those will not be taxable to you as income. That's the good news. But the stuff that you spend money on using those funds, so your payroll and your rent and all that stuff, which normally is tax deductible, they will not be tax deductible. So I don't think it's exactly a wash, because it depends on your bracket and stuff like that. But it's yeah, it's not taxable, but it ends up being kind of taxable anyway, in that it doesn't let you reduce your tax liability like you normally would. So that's something for you guys to keep in mind. Now, what documents can you expect for the forgiveness application process? There's a whole, so the actual forgiveness application itself is going to have a whole bunch of stuff. Okay, it's got a whole like loan forgiveness calculation form. It's got Schedule A, which has got all kinds of like stuff in it, and then there's a whole worksheet you have to fill out, and then they have a demographic information form, and your lender, and this is like this is the minimum. Your lender is likely going to have its own format and might have additional requirements, but most of the substantive information that will be required has already been laid out by the SBA. And in addition, you might expect that they'll want at least the following information. Okay, so payroll records for the cover period or alternative cover period or the super duper mega monster cover period is going to consist of, well, first you got to have the records of the number of full-time equivalent or FTE, right, employees, the state and local taxes you paid, payroll taxes, Form 941 for you that have that, statement or receipt of employer-paid health insurance, statement or receipt of employer-paid retirement benefits, bank accounts, or third-party payroll reports documenting cash compensations paid to employees. For the other stuff, you want statement or receipt or cancel checks for mortgage interest payments. And for the mortgage interest, you want a copy of the lender amortization schedule. I mean, there's a whole bunch of stuff, right? And same with rent and lease payments. And they'll probably want to see a copy of your current lease because they want to make sure your lease started before February 15 and not after February 15. And same with utility payments. They're going to want to know that your utility payments, your utility subscriptions started before February 15. Just keep in mind that you're required to keep all documentation related to your PPP loan on file for at least 6 years after the loan is forgiven. So, you know, if it's digital, you know, just that's fine, back it up. If not, then just make sure you take good care of it. Now, let's talk about EIDLs, because a lot of you have gotten the EIDL grant and or loan. So EIDL stands for Economic Injury Disaster Loan, and that's something that you can, unless you're in agriculture, at this point you probably can no longer apply for because they've run out of money. But many of you did get in time and were able to apply. So, as for those of you who did apply for an EIDL, you know that it consists of two parts. First, there's the advance or the grant, and that's the part that you don't have to pay back. That's just, you just have it. As long as you spend it on correct things, you can keep it. And then there's a second part, which is the actual loan. Now, let me first clarify, contrary to what you may have heard, you're allowed to have both an EIDL and a PPP loan. But you have to be careful on how to segregate and account for them. If you want to, especially if you want to maximize your chances of PPP forgiveness. The absolute, look, each one of us, you know, is in a different situation. Some of you have okay cash flow right now, some of you don't. I'll say that the absolute simplest way to kind of segregate PPP and EIDL and make sure that you're not getting in any trouble there or losing any forgiveness is, if you're able, you know, I'd say consider putting your EIDL loan aside in a separate bank account. And if you can, avoid using it until the whole PPP process is done, then you might want to consider doing that. Because for your EIDL loan, I mean, you've got 30 years to pay it back, so it's not like you have to use it imminently. But that's, I mean, if you don't want to do accounting or bookkeeping or do any paperwork, or you just want to be super, super safe, you can consider putting aside not using EIDL until you've gotten your PPP funds forgiven, and now you can start using your EIDL. So no one can claim that you commingled. But you don't have to do that. I don't want you to think that you have to do that. You can use both, but you just got to be very good at tracking it, because you can't claim the same payroll expense to have been used by both your PPP funds and your EIDL funds. That's going to be a problem for you. Now, as far as your EIDL advance, so initially there was a bunch of confusion on this. But the unfortunate news is that although, let's say you have 5 employees, right, and you got a $5,000 idle grant because they've been giving $1,000 per employee, yeah, you don't have to pay that money back. But if you also got a PPP loan, they're going to reduce the amount they're forgiving of the PPP loan by the amount of the grant that you got. For example, if your PPP loan is $40,000 and your idle grant was $3,000, the maximum you can get forgiven for the PPP loan is $37,000. So you can't double dip, and that's unfortunate, but you know that's what it is. Now, let's talk about just some strategies and tips to help maximize forgiveness. Obviously, just the most obvious thing is use as many of the allowed expenses as possible. Literally go down the list of everything you can spend money on and make sure you're doing that, especially if it's part of the course of your normal business. And make sure you look at the time, right? Make sure the timing works and everything. That's not a super secret sauce. I mean, that's just the best way to do this. Now, you should know that employee bonuses, as long as you're not going over $100,000 per employee prorated, employee bonuses are forgivable. So if you are planning to pay bonuses and your team deserves it and you have the money to do it left in the PPP, now's a good time to do that. So that's something for you to think about. Another thing is severance payments. Now, many of you, especially those of you in Virginia, just the default employment is at will unless you've somehow done something unintentionally to make it not at will. At will means you can let an employee go anytime for any reason and you don't have to pay anything. Likewise, they can leave anytime. But some of you have contracts. Some of you have intentional contracts that you actually drafted a contract with your employees, and others have unintentionally created contracts, and you did that either by email or by saying the wrong things or by your offer letter having the wrong language in it. And in those cases, basically you might have to pay severance payments. Well, the good news is that severance payments are forgivable if you use PPP funds to pay for them. So, if you can, just consider whether this is a good opportunity to help certain employees transition if you have employees who perhaps are not a great fit for your business. If you've been on the fence about anyone, consider whether this is a good time to help them make that transition. Okay. And also consider growing your team. You can hire more people. You hire more people, you put them on payroll, that's forgivable, assuming they're legitimate hires and you can show the work that they did. So again, this is a great way to use up your money. So those are just, some initial tips and strategies. I will add a couple things. New legislation, we're going to keep an eye on it. It's going to open up more strategies, and once we see what the legislation looks like, we're going to find the loopholes and we're going to find the traps and the opportunities to get maximum forgiveness. So if you stay in touch with us, that's the kind of thing that we'll keep an eye on. And another tip is just keep checking with your lender. What we've seen in the PPP application process is that although the SBA has laid out rules, some of the rules have been ambiguous, and a lot of lenders have come up with their own interpretations. And even some rules that were not ambiguous, some lenders just straight up did not do what they were supposed to per the SBA guidelines. And it's just really hard and impractical to fight with lenders, especially when it's, you're arguing over $1,000, couple $1,000. I mean, you could sue them, but it's probably not worth it for that amount. So, my suggestion is keep checking with your lender. Each lender is going to treat things a little bit differently. For those parts of your situation that are not obvious, get with your lender, ask them. They'll say, we don't know yet. Ask them again the next week. If you got your loan through, a small bank or something where you can have a specific person there be your contact, that's even better. But I realize that's not the case for many people. And the last thing is get professional help. That's probably the best thing you can do. I mean, I've laid eyes on the application, and the application itself is a nightmare. But it's not even the application that worries me. It's the process to get to the point of the application, meaning right now, it's how to strategize and how to spend your money in such a way that will make filling out your application as easy as possible. So, you know, you could do all of that on your own. You could research. You could wait and see what the new legislation says and how the SBA interprets that and how the lenders interpret that. Or you could just get the assistance of, you know, professionals who can help you do that. Now, you know, our office is obviously helping with that. But even if, you know, I mean, you could explore other opportunities as well, but do explore something, okay? Now, by now you're probably wondering, Paul, this sounds great. I want the help, but what can you guys, you know, do for me, and how can I get started? And I'm going to answer that in this, you know, now I'm going to explain to you what we can do for you, and after that, I'm going to do Q&A and answer as many of your questions as possible, because I'm seeing a whole bunch of new questions, even, you know, on top of what I already had from the registration forms. So we'll get to that. So first, I'm going to explain to you what we can do for you. Okay, so we're offering what we call PGI Law Forgiveness Package. It includes a few different things. First, it includes, and let me just explain, this package is on a flat fee basis, and your fee will depend on your loan size. So when you contact us, we'll let you know what it is for you, but that was just the most, based on the amount of work that's going to be involved, that was the most reasonable way to do it. Now, the forgiveness guide, it's going to be a much more fleshed out, much more detailed version of this PowerPoint. Basically, whatever we could not get into 1 hour here, that's what the forgiveness guide will cover. And it's organized in a logical way and in a way that you can read, like, you know, and you don't have to be a lawyer to read it. So it's not too short, but it's not too long, and we don't have extra stuff in there to confuse you. We just have what you think you will need. And the most important part of it is that it's going to be a living guide, okay, which means that as legislation changes, we're going to keep up with that, and as soon as we see an update that's relevant to you, we're going to update this guide and send you the revised version, or we're going to send you an email update. Point is, as long as you're with us, we're going to update you as we learn new things, and because we're going to keep learning new things. A, this legislation has come out. B, the SBA is going to take its sweet time in interpreting that legislation. And by the way, they're always behind. So the SBA was 4 days after the application started. That's when the SBA issued guidelines. 4 days after the self-employed application started, that's when the SBA issued guidelines. Weeks after the forgiveness started, that's when the SBA issued guidelines. So they're always behind, and in between, you're going to have to read between the lines, and we will do that for you as well. So the other thing this will include is assistance with filling out and submitting your actual forgiveness application. So by the way, it's the same, the bulk of it is going to be the same application for everyone. So even if you got an $18,000 loan, you have to fill out basically the same application than if you got a $200,000 loan. So obviously, we'll never guarantee a result, but you know, by definition, we're not allowed to. But given your situation, we're going to work closely together to put together the most correct and the most effective application we know how to do. And again, it's going to be updated with the latest. I mean, some people have done one-time consultations with me in the last few weeks that are now partially outdated because things keep changing. Now, for many people, these two things are more than enough. That's all they need. But for others, they're going to need additional assistance because they have special circumstances or they want specific advice. And in many cases, you'll have, you know, more questions or opinions. And what we're going to do is we're going to provide you a lot of time with our team. You know, specifically, we're going to give you up to 2 hours with the staff members and up to 1 hour with one of our attorneys. And we all know the PPP inside and out. We're all trained in it. I can tell you there are points throughout this process where our receptionist knew more about PPP than many bankers out there. We've been obsessed with this stuff in this office. So you're going to have one-on-one private time that's going to be included. Just so you know, just to give you an idea, normally 2 hours with a paralegal, an hour with an attorney, that would, if we're billing normally hourly, that would be $890 value by $890, and that value is included in the flat fee. So this is time, just to be clear, on top of the time we're going to spend to help fill out your forgiveness application. Okay, and then one thing we're going to start doing now, we actually haven't done it before, so just starting with this webinar, we're going to include a bonus. And what this bonus consists of is this. So if you apply and your lender is disagreeing with the figures that you and we came up with together, and your lender won't listen to you after you tell them why they're wrong, we're including in this package a specific amount of time for one of our lawyers to deal with your lender directly and try to get them to see the light. So we're going to contact them directly. We're gonna basically negotiate with them directly. And that again is a value of hundreds of dollars, and that's going to be included in this flat fee if you need it. Now, just to be clear, we can help with people around the country. Normally, for a lot of our services, we can only do them in this area, but for this, we can help people in California and Hawaii and Chicago. So I just want to be clear about that. Now, this package is not for you if you're planning to wing the whole thing, okay, or if you're not motivated enough to actually take the time to plan your expenses correctly. So if you know a fellow business owner that you had to push to get the PPP, or to actually to push them into actually putting thought into how to use those funds, please don't send them our ways, because that's not the type of client we're looking to work with. But I think most people on this call are not in that category, and you guys are the type of business owners that we get excited about working with. So I want you to think, what's it worth to you to get to keep your PPP funds and not have to pay them back because you made a mistake in your planning, or you didn't fill out the application correctly, or your lender didn't take you seriously? How would it affect your business to have to suffer through that? And conversely, how would it affect your business to have the PPP funds forgiven? And I think the fact that you're here suggests that you know the answer to that. Now, if you are doing this, I just want to be clear, it's going to be the same fee whether you engage us today or you engage us the day before your covered period ends or afterwards. So it's going to be the same fee no matter what. So obviously it'll make sense for you to do it as soon as possible so that you can get the guide now and the updates starting as soon now, which could be by Monday or Tuesday of next week. We start getting them in your private time with us as soon as possible. Because the sooner you plan out your expenses correctly, the more you're likely to get forgiveness. So if you're going to do it anyway, it makes complete sense to do it now. So how do you do it? I just added the line at the end of that slide there. You can call us at 703-865-6100. That's our phone number. Or you can email forgiveness@pjilaw.com. That's an email that we created just for this. Please don't send us a list of your sins. That's not the kind of forgiveness we're here to offer. Just let us know you're interested and give us your phone number and we'll call you. Now, based on how many people are on this seminar or webinar, we're expecting the phone to ring off the hook. So let me tell you this, if you email us, you might not get an answer within 5 minutes, but you have our promise that we will get back to you by the end of today. And in fact, we'll probably get back to you much sooner than that, but I want you to know if you email us today, you will hear back from us today. So that's, make sure you know what, I will also send this information in the chat. I'm gonna do that right now because I'm gonna take the slide off so I can start answering some questions. So let me forgiveness. Okay, all right, you guys now have it in the chat. And now I'm going to start doing some Q&A. So let me stop sharing and start the video. Excellent. And let me just a quick look at the Q&As, and I also have some that are printed out here from the registration. So, all right. Can we use PPP or idle funds to pay for outstanding business loans related to renovating a new office space and purchasing new medical equipment? Okay, very good question. Generally speaking, the answer is no, because for the PPP, I already outlined what you can use it for, and basically purchasing new equipment or renovating space, it's not something you can use your funds for. Idle is a little bit different. There's more flexibility with what you can do with idle, right? You can buy equipment and such if it's a normal course of doing business. What they don't want you to do with idle is they don't want you to expand, right? Because it's a disaster loan. It's supposed to be, the policy behind it is to get you back to where you were and make sure you're not suffering, basically get you back to your standard. What they don't want you to do that is use it as a windfall and use it as an opportunity to grow your business and or to grow your product lines. So that's why, you know, renovating a new office space and purchasing new medical equipment, that's borderline for idle. You know, we can go into more detail, but that's the basic answer. I'd be very careful about using idle funds for growing the business. So let me see. All right. Okay, next question is, okay, how does a lower FTE count affect forgiveness amount? So I think the question is, probably trying to say how much reduction, because we already discussed that it would, you have a lower FTE count, there are some exceptions to that. It would normally reduce the amount of forgiveness you get, and it's got to be proportional. Okay, so for example, let's say you went from 6 employees to 4 employees, then only 2/3 of the expenses are available for forgiveness in that case. So it's going to be proportional to how much your FTE count went down. Now, related to that, I'm going to answer the next question that seemed similar to that. I heard that if I offer to rehire an employee and they don't come back, that won't count against me. That's correct. So there are some rules, some specific rules on that, but if you had laid off an employee and now you want them back, and you know, a lot of people, this unemployment thing is ridiculous, by the way. I can't believe we as employers, we have to compete with that. But a lot of employees are just not coming back to work. And there is a way where if you re-offer them the position and they don't come back, that won't count against you when it comes to forgiveness. And actually, here, let me try to find you and read you like exactly what that looks like, because I think there's a pretty specific list of things. Okay, there we go. So you need to have made a good faith written offer to rehire such employee, or if applicable, restore the reduced hours of such employee during the covered period or the alternative payroll covered period. The offer was for the same salary or wages and same number of hours as earned by such employee in the last period before the separation. The offer has to have been rejected by such employee, and you have to maintained records documenting the offer and the rejection, and you inform the applicable state unemployment insurance office of such employee's rejected offer of reemployment within 30 days. So you actually have to tell on them. You have to tell on them for you to, you know, have this benefit you when it comes to a PPP. So it's kind of an uncomfortable process, but yes, that's possible. And in relation to that, though, I want to clarify, this is for laid off employees, but if an employee is fired for cause, or if they voluntarily resign or voluntarily reduce their hours, that's not going to count against you because those are legitimate reasons. So you want to keep good records of that. So again, firing for cause, that's not black and white. So that's something you probably want to discuss with somebody. But if you can demonstrate that you fired for cause, that will not count against you when it comes to the FTE count. Okay. All right, let me look at additional questions here. Okay, oh, excellent question. Can a PPP loan be spent on bills a year in advance? Very, very good question. No, unfortunately, you cannot prepay things with PPP. Otherwise, everyone would pay their lease for a year or whatever, and that would have been awesome. But no, unfortunately, you cannot do that. There are some rules, some specific rules about the time period for which you can pay certain bills, like your rent and whatever. So you can't pay it for August, and you can't go back and pay like a large debt that you had before. So unfortunately, there are rules. They really want it to cover in 8 weeks, which again is so ridiculous. It's like, dude, just make it a couple of weeks longer and let a business spend all the money, and that's what they're doing now. But yeah, so good question. All right, let's see. There's a lot here. I'm trying to find a question that will cover a lot of people. Okay. Okay. I just got this one now, but this is a good one. Does the owner's salary fall into the employee category? So if you are if you're like let's say in your S corp and the owner is on payroll, then yes. So your payroll counts just like everybody else's. But unfortunately, owner draws above that don't count. So you're in good shape there. Okay, now self-employed. Okay, question for self-employed. Does the 8/52 rule, which is a rule that says that the self-employed can only pay themselves up to 8 weeks of what they had paid themselves last year, does that rule apply to pay employees, or is that in addition? No. So look, it will depend on, some people define employees differently. If you have true employees that were truly on payroll, the 8-week period, the 8-week rule doesn't apply to them, in the sense that there's no objective problem with raising their pay during this period if it's appropriate, even if it ends up being more than 8 weeks of what they got last year. So that it does not apply to employees. Let's see. Okay, I think I already addressed that. Okay, and let me just take a look here. Okay, there was another question. Yeah, can I pay interest on mortgage in advance? And I already covered that. No, it specifically excludes prepayment. Now, I'll say I have gotten a few questions that are very specific to specific situations. And I'm not ignoring those. I just want to say I have received your questions, but they're very specific to your particular situation, and they also require me to ask you more questions to get information. So I want you to know I will not answer these, but I'm explaining why I won't be able to answer them. But you can contact our office, if you'd like more on that. So I'm sorry I couldn't answer those questions. And so those are basically all the questions. So it's 11:54. I'm gonna let you guys leave early. But thank you all for your time. And again, if you want to follow up with us, you have the information in the chat. I think it didn't send initially, but it's sent now. And thank you all. You're welcome. Thank you. I'm getting thank yous in the chat. I really appreciate that. Thank you for joining. And hopefully this was helpful. And I hope some things will change probably with legislation, but I think probably 85% of what we talked about will be the same. But keep an eye on it, and those changes could make a big difference. So just keep that in mind. So thanks a lot, and you guys have a great day.